Cautiously, I'm going short the VIX in a very short period of time. I've used an extended date for my entry point. The reason why is because I want to get some of that time and see some depreciation over the next 2 to 3 or maybe 4 days. But what I don't want to do is be short going into Friday. The VIX itself likely to calm down. We're seeing a little bit of a move higher in the S&P 500, of course, but stocks like UVXY, I expect will probably ease off a little bit as we go in closer and closer to Friday. We've seen some serious down moves with the stock market, broadly speaking, simply because bond yields have been pushing higher and higher and higher. Wednesday, Federal Reserve. The market should calm down. We're seeing put call ratios kind of decline a little bit, and this is what I'm looking for to kind of see that people are basically kind of hedging themselves out and getting out of these risky things. The stock market moving up a little bit. But one thing I'm not going to be doing is staying short going in front of non-farm payrolls on Friday. May take a different approach then. I'll probably take my profits. Let me show you some of the charts I'm looking at, and I'm specifically trading UVXY off of the VIX so I can show you what I'm doing and how I'm doing it when I plan on getting out. I'm already up a couple points on my short UVXY stock trade simply because the market is backing off. Let's jump in. If you are just joining me for the first time, this is a breakout channel from my original channel. I'm trying to keep stock market analysis on just those kinds of items in this channel. Channel's going really well. I had some videos go semi-viral over the weekend. Thanks so much for following along. Like and follow button is down below. Also in the descriptions, you can find written analysis on the stocks I cover and some of the other things I do for economic analysis, looking at the broader economy and how that affects the stock market. dhtayloranalysis.com is my website. There's a free email newsletter for you there, letting you know when I have new content come out. We are looking at the VIX itself. This is the 1 hour bar chart. And I stepped in last week and I kind of did the same thing. I took a short position on some VIX calls. I trade UVXY or UVIX, depending on delta, what kind of price points I'm going to get. They're interchangeable. But UVXY is sort of one of the more popular ones that people get involved in that. I think it's trading around 18 right now. The bond market has been pushing higher and higher, but has been calming down. We're getting closer to Wednesday's Federal Reserve and, of course, non-farm payrolls on Friday. And this is what I really have been focusing on myself. First and foremost, I am an economist and I study the economy. Then I apply that to what's happening within the markets. The markets right now are going to calm down, relatively speaking, simply because no one wants to really take on any positions in front of what the Federal Reserve might do on Wednesday or what non-farm payrolls might force the Federal Reserve to do after Friday. We'll see how non-farm payrolls plays out. I don't expect much out of Wednesday. I think the Federal Reserve has already told us everything we need to know. They're very concerned about inflation. I don't think they're going to surprise us with anything. But non-farm payrolls on Friday could pressure the Fed, plain and simple. From there, where do we go? I'm short calls. Thursday, at the very latest, I'm out of my short position on my UVXY short call position. I'll probably reevaluate then. Maybe I'll straddle the market with puts and calls with an expectation that we'll see some kind of movement on Friday going forward. So this is a look at the VIX, and I could probably see the VIX dropping to about 1650 over the course of the next 2 or 3 days going into non-farm payrolls. I look at non-farm payrolls as a much bigger event than the Federal Reserve on Wednesday. So the market is probably likely to calm down. The big catalyst, of course, here's your bond market. This is the 10-year benchmark rate. The yield has been kind of going flatline. You see that big drop from right in the center, right around the 24th or so, 23rd going into the 24th. That was safe haven buying where everybody rushed into the bond market, concerns over the Middle East. Those concerns got sort of evaporated. We don't think that there's going to be a spillover from what's going on in the Middle East because of that. Bond yields went right back upward, but since then have kind of mellowed out. And that's kind of my take is that one of the things that the VIX really operates off of, UVXY, is what is going to happen with expectations. And here is a put call ratio. This is both equities and indices that I have here. And as you can see, things are mellowing out, that the put call ratio is sort of dropping. And if the put call ratio drops, that means valuations for puts decline, which would bring the VIX lower. My UVXY calls deteriorate in value. From there, it's a matter of time, theta. I want to see theta go by. I want to see vega kind of move downward. My delta will probably go from, say, a 40 down to maybe about a 10, 15. And across the board, delta, vega, and theta, I'm making money in all categories for my short options position. Basically, I'm playing a market that is going to mellow out for a couple days, if nothing else. Everything changes on Friday. Either we see a big move upward in the VIX or a big move downward in the VIX. And it's all dependent upon what is the non-farm payrolls number going to look like. Last month was a wow kind of number. Is it possible that we see exactly the same thing? Yes, it's absolutely possible. Is it possible that things mellow out? The thing with non-farm payrolls and employment in general is that it's a lagging indicator. Thursday, we're going to get a pretty good indication of how strong or robust the employment situation is. We're really seeing nothing going on with initial claims or continuing claims. They've kind of mellowed out and have gone basically flatline as well, which means non-farm payrolls is probably going to stay elevated. Maybe it'll back off a little bit. Maybe. We also have to watch out for revisions. They happen every single month. The previous 3 months are always on a preliminary basis. We'll see if we get any kind of revisions upward or downward. There were big revisions last month. Let's see what these numbers look like going into this month's number. But I expect that we're probably going to continue to see some pressure with employment, and that the Federal Reserve is eventually going to have to sit there and say, listen, things are too high, too long, and inflation is not coming down. That's the end result that they're looking for. Going into that number on Friday, I'm out. I'll put a new trade on, UVXY. I'm short some calls right now. It's working out so far. I'm looking to take that profit prior to Friday, and then I'll probably strangle the market with puts and calls. Straddle, strangle, haven't decided if I'm going at the money or out of the money on either one of those, and I'll make that determination at that point. But I am going to get out of that particular trade going into Friday's number, and I'll be long puts and calls on Friday's number. Maybe the day before, because we do get some kind of expiration on Fridays. That's an easy one. Nonetheless, this is a new channel for me. I've broken this content out, stock market analysis. So if you are looking for stock market analysis, where I break down all the aspects of the market, kind of put it all into one channel, make sure you hit that like and follow button. You can find my other content and my website in the description below. We'll see you in the next video.